So, folks, welcome back. I know it's been a long time, but your boy here, and your boy is alive, and your boy is feeling fine. And today, your boy is here to talk about some stocks and what's going on in the market, guys. So, I hope everyone is doing good. I hope everyone is doing fine. So, welcome back to the channels, guys, and let's chop it up and let's kick it off today. And in today's episode of the stock market recap, guys, we're gonna look at some stocks and we're gonna look at some chart um, base of what happened today. And if you are living under a rock and you are not familiar with what's going on in the stock market and what's going on with earnings and what's going on with global economy, then you should just get out the market. This place is not for you. All right. So let's chop it up and let's get right into it. I hope you guys are doing good and I hope you guys are locked in. And today, guys, let's kick it off by looking at the S&P 500. That's a SPY, and let's look at the charts and see how we are cracking off. So looking at the charts, guys, we're looking at the daily right now. Let's just move a few of these support lines that we had in place and just let's recreate a different scenario on the chart. Boom, guys. So, based on all the bad things that's happening right now in the economy and whispers about a recession and the bad earnings that we're getting from some major companies such as Apple, such as Facebook, such as Amazon, companies like that are having terrible earnings report which are coming out, and aggressive interest rates hike that have been taking place by the Federal Reserve, the strength of the dollar, global tensions, what's going on with in Ukraine and Russia, supply chain, a lot of things are having um, a strain on these companies and how they're able to function and be profitable and what it's going to cost them and the time that it's going to take to get the product or service to the customer. So, looking at the SPY, guys, we clearly found some support around 415, 4 around 415, 419. So basically between 410 and 420 is a nice support level, and we clearly hit that level several times. We hit that level on the first month, that's January 24, 2022. Once we hit that level again in February and March. We hit that level 1, 2, 3, 4, 5, like 5 times already since the start of the year. We hit that level and we confidently find support at those levels. So to me, based on the chart, what it's telling me that we're finding some strong support at these levels. But let's hope and see if the economy is going to continue to improve or things are just going to get worse and earnings are going to be terrible for these companies. And let's see if we're going to have a recession coming in the next 12 to 18 months. Let's see what's happening in the economy and see how that's going to be reflecting on the charts. Okay. So personally, my investing strategy when it comes to investing is basically buying companies that are of good value that you use on a daily basis, that you know you can't live without, that makes your life easier, who have been in the, say, alive in the industry for more than 10, 15 years, companies of that nature. When you go out, you should look around and you should see like what's this certain thing that most people have. You know, if, for example, if you're at school, right? Look and see all your friends. 90% of your friends, they have an iPhone or they got some Apple product, Apple Watch or Apple headphones or some stuff, something like that, if you get what I mean. So when you go into the grocery store and when you go into the drink section, you always see Coke. I guarantee you, every section of every grocery store you go in there, Every slot machine you go, you're gonna see a Coke. So you get what I mean? You go to a restaurant, they're gonna have Coke. You go to a fast food place, they're gonna have Coke. You go to the gas station, they're gonna have Coke. It's that easy. So boom, looking at the next resistance level for the S&P 500, we need to test, we need to break 440, and we need to hold above 450 for any positive bullish move to take us back to the all-time highs, which I'm not sure is possible in this marketplace right now. So it's looking very bleaky and it is looking very rough. This is on the daily time frame. However, let's look at the monthly. So we still have some ways to go if we're gonna um, end up on the bad side. We would be looking to drop to 352. That would be a major, major, major correction in the market. And the next support, if we do break 410, we should be looking at 400 for the S&P 500. That's the major next support level if things continue to bleed out. Okay, guys? Excuse me. So if you're a bear, you would be looking to target these levels. And if you're a bull, you would be looking to target the 430s next. So let's look at Facebookian and see what Facebookian is going on with. Let's look at the daily for Facebook. So clearly, after Facebook had a huge sell off from $300 all the way down to 200 and all the way down to a goddamn 160, 170 level. So after that, we clearly see over the last few days, Facebook has gained some momentum and it has found some strength, and the dip was bought at 169 all the way up to 205. So Facebook have a long way to go to get caught up with the all-time high levels that it was trading at a few months ago. You guys remember that big drop Facebook had? It was it was January. There was a huge drop all the way down. I remember that drop. If you remember, you remember. So let's look at Facebook on the weekly. So Facebook on the weekly right now is looking very, very bad. It is looking like a buy the dip area once you hit 137. Let's look at the monthly if we can get some more history. So yeah, if we do break this area, if we don't find strong support to hold us above 200, I definitely think we're gonna go and test the 120 levels, maybe 100 on Facebook. If things continue to be dark and ugly in the stock market and also in the economy, if things don't get better, I think we're gonna definitely go and touch these levels. The last time we were trading at these levels were 2017. It would be very, very ugly to see the whole market go to 2017 levels. I think if you get those levels, guys, that's a huge buy the dip opportunity to set you up for the long term. And you should look to buy and dollar cost average in good quality companies. Don't go and chase hype stocks that you see on YouTube that everyone is talking about, the brand new stock. Oh, this is the next 20x. Go for the granddaddies that have been in the market for years and that that's still going to be a granddaddy in the next 20, 30 years to go down in life. Next 20, 30 years, Apple is still going to be around. Google is still going to be around. Amazon is still going to be around. Companies like that, Coca-Cola, are still going to be around. You know what I mean? Berkshire Hathaway, companies like that. That's the companies, Visa, MasterCard, Nike, old companies from way back in the days. That's the companies that we need to be getting our hands and getting our money stored into. And we need to be getting dividend stocks that's going to pay us back some return and also help our money to grow as well by providing value because they're quality companies that provide good service to consumers. So to me, if Facebook break these levels, definitely we're gonna be looking for these areas to be tested. This is on a monthly time frame anyways, so this will take quite a few months. So if you're a trader and you're a bear and you believe Facebook is gonna continue to dump and the economy is not gonna get better anytime soon and we're definitely gonna get a recession, you should look to take your opportunity um, to short this stock and short the market all the way down to these levels and all the way down to these declines. But for me, I believe in the long term, and what I believe in is dollar cost averaging over time, and yeah, you'll be fine, pretty much. So that's where that is for me, guys. And if you're interested in Facebook, um, you can go ahead and trade it if that's up to you. If you feel like Facebook is going to be around the next 10, 20 years, you could put it as a part of your long term portfolio and you'll be okay. You just have a budget, you just dollar cost average. All right. So let's look at Tesla right now and see how Tesla is performing because Tesla has been getting some beating. Okay. We clearly see that Tesla has been getting a ass whoop over the past about a week. Tesla has been getting rejected. So we clearly see Tesla has rejected the the 1243 level quite several times on these weekly candlesticks. We clearly see that Tesla was rejected at these price ranges, guys. So come on. We clearly see that we had some rejection at these levels on Tesla. Okay. And right now we're currently trading at 877. This is on the weekly time frame. So tomorrow I think we're gonna close. It's gonna be another red day and we're gonna close. Let's look at the daily. Yes, I think tomorrow we're gonna continue the trade between the 800. If it's a bad day tomorrow, if the buy the dippers do not step in or the market mood does not change, we're gonna continue to see more bloodbath in the market, and we're gonna continue to bleed like it's our time of the month. So let's see if we're gonna bleed all the way down to 800. And the last time we went down to these levels on Tesla on the daily, we clearly found support, and this is a strong support level as well on Tesla. Besides Tesla having a tremendous earnings report the other day, we clearly see that we have been getting some hate because Elon, he bought Twitter. So I think the haters, they're coming out to short Tesla, but it is what it is. It's just opportunity for us long investors with the long time frame and the long mindset to buy the dip and add it to the long term. So that's just giving us more shares at a cheaper price. That's how you need to look at it. And traders are going to make money trading on the negative side, and long-term investors are going to buy when the price is cheap, and the long-term bull traders or the bull traders, they're going to trade when the price gets cheap because they know and they believe that the price will be valued at a higher price coming in a certain time frame. So that's why they trade it, and that's why long-term investors just buy on the dip because they get a cheaper price than what it was like maybe a month or 2 months or a year ago, depends on where they bought it at first. So If you believe in Tesla and you think Tesla is going to go to the moon and Tesla is going to be traded for $2,000 soon, you should buy on this dip and enjoy the rip. Okay. So we got Amazon coming in next, which had earnings as well, and their earnings was terrible as well today. This is the weekly. I don't know why this look like that. This look horrible. Okay, guys, this is on the monthly because I don't like all these gaps. There's a whole bunch of gap right here still need to be filled. And we're getting some red candles on the monthly, and Amazon might be heading down to $2,000. But let's wait and see if that's gonna happen. That's just the buy the dip opportunity. There's huge gaps to be filled right here, and we're getting rejection. And the market right now in the economy is talking about recession right now, and we're getting recession lingers, and we also have interest rates going up. We have a whole bunch of negative stuff in the market. And when there's negativity, that's the time when you need to pounce, when you need to take the opportunity, and that's the time when you need to buy and add to the long term. So when everything is all positive again and the market shoots back up, you already had prepared yourself and you already bought when the price was cheap. So Amazon is always a buy to me because I think it's a company that's going to be around the next 20, 40 years. Look how easy Amazon has made our lives, huh? You're getting your shipments in a day or two, 24 hours, 72 hours. You're getting your grocery delivered to you in 2 hours. You order online. You just stay home and Amazon do the work for you and you just pay the money and your life is easy. Imagine if Amazon was not able to do what they're able to do. Imagine how things were back then, how difficult it was to have things move around, and how your life was not this easy by using Amazon right now. So, yeah, think about that and add it to the long term if you're interested to hold some long term. Get a long term. That's what we're preaching over here. Okay. You can't be an investor and you don't have a long term portfolio. You don't have assets that you're holding on into that's going to give you value with this inflationary environment that we're living in at this time. Okay. So get your long term, add Amazon to it. Let's look at Apple. And this is one of my favorite companies right now. Let's hit the daily. There's no debate that Apple should always be in everyone's long term. There's no debate about that. So right now, Apple is currently it found some support at the 156 level, which it bounced. It played around at these levels before it got bought up. It played around these levels quite some time. So to me, guys, Apple is always a buy whenever it's down to me. That's basically it. Apple is going to be around for the next 20, 30 years to come. So I'm down for the ride with that. So traders, the next resistance level for Apple is 167. Once you break that level, look to test 180. And if we break 180, you already know the market mood is changed. We're definitely in a bull market. Right now, we're in a bear market right now. Things are not really looking that positive, and we're definitely getting recession talks every time. So let's wait and see. We have the Fed coming up. So let's wait and see what's happening. So let's look into crypto and look at BTC and see how BTC is going. Come on, bruv. Why are they showing me Bitcoin Cash for, bruv? I want to see Bitcoin. Why do I want want to see Bitcoin Cash. What is this? What is this, bro? Let's see what it is. I don't know, bro. No, this is not it. This ain't it. This is not what I want to see, bro. Well, it's the same shit anyways, but that's not what I want to see. Yeah, bro. Don't mind my chart. I got a whole bunch of shit on my chart. Don't mind my chart, guys. This is, we're trading that bitch. All right, so crypto, guys. Now, crypto is finding some support. Crypto is holding up pretty fine. Crypto is just in its own lane to me, guys. You can definitely own crypto for the long term as well, because crypto showed it resilience over the last 10 years, that it's a part of the market. It's going to be around for the next 20-30 years. You see how crypto has played itself in this pandemic and in this war. Crypto has proved its worth and its value in the toughest time, and it's here to stay. Okay, that's all I could say on crypto, guys. Just buy the dip, enjoy the rip. Okay, you don't want to be getting into crypto coins, moon coin or rat coin or mango coin. Don't get in that type of shit. Okay, don't try to get in the newest coin on the block. Go get you some Bitcoin or some Ethereum, or go get some Doge or some Ethereum Classic or some Cardano. Cryptos that has good value and that has been around for quite some time and has proven its resilience in this market and the market space that we're in. So let's look at the dollar, and we're gonna wrap the stock market recap up. So I hope everyone is doing fine out there. I hope everybody is good. And if you guys have any question, any comments, you definitely need to drop them below. And if you enjoy this video, just hit that like button and subscribe to your boy's channel. And if you have any stocks you want to look at, any crypto, any forex, any commodities, don't hesitate to ask. Leave it in the comment and I'll definitely get to them for you guys. All right. So the dollar right now, the dollar is going crazy. The dollar is surging right now. The dollar is at some crazy high levels at this moment as we're speaking. Okay. So the dollar, guys, we definitely see we got this huge engulfing candle on the monthly, and we're trading at all-time high on the dollar. The last time we hit this level was 2017. Okay, so if we break out of these levels, guys, I'm definitely telling you guys the dollar is going crazy. Let's zoom out and see. So if we break these levels, definitely look for the dollar to hit 120. No, I mean 110. If we break out of this level and there's no correction back to 195 or 196, look for the dollar to hit 110. Definitely. That's the next target for the dollar. So we have a high dollar. We have crazy things happening in the market. We have crazy earnings. We have global tensions. It's just an opportunity for you to get in the market. This is the opportunity for you guys to plant your seed right now in the market and to start your long-term wealth in the market. Okay? Don't be scared. Get you a list, get some good companies, get some dividends companies, and get you a budget and put your mind to it and just start getting into it. You can dabble with a little bit of options, but don't get too risky. You can trade a few commodities. You can trade some currencies, some forex pairs. You can get into that. You can dabble into that as well. Definitely, you got to be able to move yourself around in the market, and you have to know how to maneuver yourself in the market. So right now, the last time the dollar hit these high levels, we definitely had a correction and a major sell-off. So look for that to happen as well. The dollar is not gonna go up forever. So after we hit some critical levels, if we do get to 120, that would be crazy and that would be huge for the economy. Definitely, I think we would have a recession at that time. So every time there is a crash in the market, we always have a high dollar. Every time, every time. High dollar equals a crash coming, basically. If you date this chart all the way back to 1996, we had a high dollar as well. The dollar was trading at these levels. And then dot-com bubble, boom, high dollar, huge correction. 07, 08, that was a different scenario. Boom. Yeah, the dollar recovered 07, 08. Yeah, 08, 09, the dollar recovered 08. Yeah, the dollar did recover 08, 09. Then we had a correction, recovered, correction, trading sideways. And then boom, 2015, high dollar. We got sideways trading. 2017, high dollar. Then we got a rejection. So things that happen in the economy do reflect and affect the prices. So you need to bear that in mind. So based on what's going on in the economy, that's definitely going to affect the charts and affect the prices of survival for everyday life. So look at it, the market like that, okay? So I hope you guys enjoyed the video, and thank you guys for locking into. This is the stock market recap. Look out for the next video dropping tomorrow after we see how the market digests these earnings that we have got today. So look out for that video coming out tomorrow. Another episode of the stock market recap. And I hope everyone enjoyed this content. Like, subscribe, share, and I'll see you guys in the next one. All right. Peace out.